Fox Business Alert after technical difficulties last week. GameStop investors finally got to hear from the CEO, but they did not like his message, as you see from the stock, which is falling 9.5%. Ryan Cohen telling investors the video game retailer will be focusing on profitability by cutting costs and operating a smaller network of stores selling higher-priced items. Cohen gave no indication of how GameStop will use its $4 billion in cash after it raised $2 billion following a share sale earlier this month. Charlie Gasparino is coming up in just a minute. He's got a follow-up on what this means for meme investors beyond today. So we already showed you GameStop shares falling 10% today, but still quarter to date, they are up 104%. How long can that last after shareholders were disappointed today by CEO Ryan Cohen, whose messaging at the video game retailer shareholder meeting this morning was short on details? Charlie.
Not just details, and I think the real problem with this was it was short on growth, a growth plan. I'm going to quote Jack Welch, the legendary CEO of GE, who was once said to have remarked, "Any moron can cut jobs or raise prices." I'm not calling Ryan Cohen a moron. In fact, I know he's not. But you get what I'm saying. If your strategy to survive and to grow is to simply cut stuff, which it seems like, based on everything he said at the shareholder meeting, there was no growth plan. He was talking about need to cut. You got a real problem with your business. We should point out that, again, he failed to deliver a growth plan. It's a very problematic company. It sells video games in malls. Think about that. People don't go to malls a lot, and people generally don't buy these video games in these retailers. They buy them on this thing. Again, he didn't have much. He's talking about job cuts, not good. And we should point out that this is a company that just announced losses and has been pumped up by a combination of irrational exuberance surrounding roaring kitty back into the mix of the meme investor buying more stock and stock pumpers on social media. It really is a company that you scratch your head and you're like, are we still talking about this?
Well, let's get to the details. He said he's going to cut the number of stores. He's going to cut jobs. Meantime, they are now sitting on $4 billion in cash
that he raised.
Well, they better not increase compensation.
Now think about it.
At the same time.
That's a whole other story. But think about it. How are they raising money? It's not like they're generating cash. They're literally diluting shareholders every chance they get. And so, again, I say with this is a problematic company. It's not that much different in many respects from AMC, a name, but not a great business for growth. And if you throw your money at this stuff, be prepared to be disappointed, as you have been in the past. I mean, by the way, that number, $4.89, is really 48 cents.
That's for AMC.
Yeah, that's after a reverse split. GME is, has a better track record, but it's off its highs. And, but before the Roaring Kitty thing, this thing was trading at like, I don't know, take a look at the chart, $12, $13 a share. I mean, it was down this year quite significantly, like 20-30%. So again, you go there, it's on you. But remember, this is, I tell people that, if you ask me about trading and gambling, I mean, yeah, you can do that. It's fun. But if you're betting your life on this, and a lot of people think that these are get-rich-quick schemes, they often lose their shirts, and they've been losing their shirt for a while. I would just also, one of the things he didn't do was take questions. And I think two relevant questions, and one is what you brought up. What's the compensation? Are you going to take money out of this company? I don't know if he's taking compensation out of it. That would be one I would ask. And he didn't answer, didn't take questions for God knows why. Usually you take questions, right?
Yeah,
unless you're looking to hide the football a little bit. Number two, are you going to dilute shareholders more? And I think, these are things that when companies don't take questions, you gotta. Remember Paramount didn't take questions?
I'm glad you're bringing up Paramount. Both Paramount and Warner Brothers Discovery are hitting 52-week lows, could be even longer than that. $7 and a penny, the low of the session for Warner Brothers Discovery today. Paramount, for its part, I can check it. Can we bring those up if possible? $9.85.
Well, I wrote a column this weekend, which kind of laid out why, what's going on and just how bad of a situation Paramount is. And Warner Bros. Is a different story. They didn't do the NBA rights, right? They didn't spend the money. And people are like, well, if they don't have the money for that.
$7?
Well, maybe it's a buying up. I don't know. I'm just telling you why people are trading it down. They don't have the financial situation, to be honest with you, that Paramount has. Paramount has a lot of debt on its balance sheet. It's got two classes of stock. It's got programming that is of all, Rich Greenfield had an interesting summary tweet this weekend. He said something like, Netflix has a market cap of $222 billion, which is several $billion higher than the next four largest media companies. And in that mix Fox was in that mix as well. But so was Warner Bros. Discovery, so was Paramount, and so was, who was the other one? I can't remember the other one, but it was the four largest. So we do have an issue here in media, and Sherry's got the weakest hand of all those, we should point out. Sherry Redstone.
Charlie, thank you.
To say that investors were displeased with Ryan's words is somewhat misleading considering that the price of GME was dropping well before he began speaking. Additionally, Ryan Cohen does not accept a salary from GameStop and none at all. He bought GME stock with his own money, and as he had said in the past, either the company turns around or he goes down with the ship. So keep in mind, he only makes money if the stock moves higher. Now, let's talk about GameStop's annual meeting of stockholders. GameStop CEO Ryan Cohen said that the company intends to continue reducing costs and focus on profitability. Practically speaking, this means a smaller network of stores with an expanded assortment of higher value items that fit into GameStop's trade-in model. Regarding the recently raised $3 billion, GameStop said, quote, "We have nothing more to say about the $3 billion we raised last week. We are focused on building our business. As I said many times leading up to the meeting, I was not expecting any announcement about a merger or acquisition so soon because M&A takes time. Now moving forward, I think GameStop is in a good position right now. Solid leadership, roughly $4 billion in cash, and they have the opportunity to transform the company's business model in a meaningful way. In the short term, GameStop is focused on reducing costs, and I think that should be the first item they focus on. Once GameStop is consistently profitable, then it makes sense to focus on increasing revenue, whether that be in the form of an acquisition, investment, or something else. I hope we will hear news at some point in the future about GameStop revamping their business model. There are many different possibilities as to what GameStop could do. They could enter the video game publishing business, they could acquire a studio, they could become a holding company, they could do something with AI. I don't know what the future holds for GameStop, but I want the company to survive and thrive for the sake of their many customers, employees, and shareholders. I'm tired of companies being targeted over the years by short end-of-store campaigns, naked short selling, and numerous other forms of manipulation. So it makes me very happy to see GameStop doing well. The company has made substantial progress over the past few years, and I'm excited for what the future holds. As for us individual investors, what we want is simple, and nothing we're advocating is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.